It's an hour before the open on Tuesday, February 8th. My last video was on Friday, so let's take a look at the pick. I also had a really good question on how to exit trades, so I'm going to give you a couple of tips on that. Amazon, AMZN, 1 hour after the open on Friday. I gave you this pick. You had ample opportunity to get in. This is about where the video came out. You can see how Amazon just smoked the entire day. Really, really nice finish, great earnings reaction. That's what we were trading. So hopefully you made money on it. Had a lot of people post that they did take the trade and that they did very well on it. So you've got this gap higher right here, and you can see that the stock was able to preserve almost the entire gap. Yes, the first bar it pulled back a little bit, but that was the biggest pullback of the day. And then gradually the stock started to make its way higher, tried to get through that high. Eventually, when it was able to, it really gained some traction. So it takes a while for these stocks to digest big gains like this, but when they hold them and they hold that gap up, it tells you that buyers are engaged. Well, what do you mean by that, Pete? It means that a move up like this would fail very, very easily because you'd have lots of profit takers. Wham, 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 and then the gap starts to fill. Well, that's going to be the tendency for some traders who have had nice profits on that earnings reaction. But the buyers overwhelm that profit taking. Takes a while to digest, but every time the sellers come in to take profits, there's a buyer there. Eventually, the buyers gobble up all the supply, and then the stock starts to move higher. That's what we were seeing in Amazon. If you see a stock that gaps higher that instantly starts to give back its gains, well, that's probably going to continue for quite a while. So be careful. Not all gaps mean that you go in and you rush in and you buy. You want to see that gap preserved. You also want to be able to go in on a daily chart and see how that move related to the stock overall. In this particular case, we had Amazon getting through this downward sloping trend line. And that also told us that that was a nice move. Put up the major moving averages. If they come into play, those also will support the fact that the stock wants to move higher. So if this were a gap up through, let's say, a 100-day moving average, even more conviction that this stock is going to go higher. So Amazon looked great. How did we know when to get out of that trade? Well, let's go back and take a look at the trading action that day, and you can see how there was really no head fake. The stock just continued to gradually drift higher. So you really didn't have a reason to take profits on it. You can put up the EMA 8. That's something that a lot of traders use as long as the stock is able to preserve that EMA 8, that is the exponential moving average using 8 periods, you stay in the trade. The other thing you can do is you can overlay 1OSI. Any relative strength indicator will work as long as the orange line is above 0. Let's expand it just a little bit so you can see. As long as that orange line is above 0, it's strong relative to the market. And you can see how it preserved those gains right up until here. Then it started to soften up relative to the market. The other thing that you want to watch, what's the market doing? Market first, market first, market first. As long as the market is continuing to grind higher, you can stick with the position and you have no reason to get out of it. I went back to that particular day. You can see how the market made an early low and then it really took off. It didn't give you any real reason to exit until this area right here looks like some profit taking is starting to set in on the index itself. And you can see that because you have overlapping candles and you have mixed candles. So you're starting to lose some market momentum. Hey, with a stock like this, can I stick with the position? Yes, you can stick with the position as long as it maintains its relative strength and the market looks okay. That particular price pattern I just showed you meant that the momentum in the market was starting to stall out. So take some profits. This is not an all or none event. You don't have to be all in or not in at all. You get in the position here. Hey, everything looks pretty good. Add to it right here. Yeah, we got a little compression. I want to make sure that this doesn't roll over. Oh, here we go. We're continuing. We're making another new high. Okay, let's add a little more to the position. And as the stock starts to grind higher, you should be adding to the position. Add to your winners. And then eventually, when the stock starts to flatten out and lose its momentum, start scaling out of your position. You can always leave some on. In the event that the stock continues to move higher, you'll still have some exposure, but the trade will be much easier to manage because you've taken profits along the way. So that's a review of the trade on Friday for Amazon. Really, really nice trade. Let's take a look at the market. What's the market doing? Let's fast forward and you can see the 10p indicator gave a nice buy signal here for the S&P. Really nice rally in there. And here you get a little red arrow, so you lose money on that, but you catch that last part of the move and look at that nice sell arrow right there into the close. Let's fast forward and see what happened on Monday. So we come in yesterday and we get this bullish cross right out of the gate. Choppy trading. There's nothing going on here. This is a pattern that you want to avoid trading futures in because you have mixed overlapping candles. Long green candle, long red candle, all overlapping. Tails above, tails below. This is garbage, garbage, garbage. There is nothing. There is no movement. Oh, here we go. Here we go. Oh, that's a nice little breakdown to a new low of the day. Okay, yeah, you get 3 stack candles in here. You take out this low, but up until this point right in here, there's not really much to trade. If you were to just simply use the 10p signals, okay, you get long here, you're stopped out here. You lose money on that trade. Get long here, you get stopped out here. That's a scratch. Get short here, cover here. Okay, that's a nice winner. Let's say that it washes that loser. Probably did better than that, but the point is now we're in another compression on the low of the day. Green candles, red candles, green candles. We're compressing. We're not going anywhere. It wasn't until you had this downward sloping trend line that was breached to the upside with a double bottom low where you can go, hey, okay, this is a pretty decent buy signal in here, and the market kind of drifts higher. But even this rally in here is not strong. This is a very weak trend. Well, how do you know that, Pete? I know that because we don't have any stacked candles. Overlapping mixed candles. No bueno. So now you get an upward sloping trend line here. Get a nice bearish cross here that tells you right about in here we should be looking for a market decline. Upward sloping trend line. There's your drop. Couple of candlestick patterns that you should be aware of. This is a new high of the day. Nice long green candle. So we get a new high of the day. Bullish speculators rush in. Red candle erases that long green candle. So bullish speculators are getting flushed out. The door just got slammed in their face. Okay, that tells me there's resistance there. The other thing you should be noticing is that we have an inside day, meaning that the current price action is less than the prior day's high and it's higher than the prior day's low. Inside day, flat open, nothing brewing here. We got to be very, very patient and we have to wait for our setups. As far as trading index, we can trade stocks in this environment, long and short, knowing that the market is not going to have that much of an impact on the individual stock. So, as the day unfolds, you start getting into a period where, okay, now it looks like things are kind of moving higher, but again, no great trend strength. So this bearish cross, yeah, you can expect that once we have technical confirmation, a breakdown of that upward sloping trend line, that you can get some selling into the close. So that's yesterday's market analysis, but let's zoom out and just take a look at the longer term picture. We don't have much of anything going on here. I do like the fact that last week we tested the 200-day moving average and we bounced off of it. That will give buyers conviction that, hey, we came down, major support level, bounce, bounce, bounce. Okay, now we've lifted off, we've cleared the 200-day moving average. That was a retest. last Friday, and you can see how the market has been able to move off of it. But in general, very volatile trading. Not particularly good for swing trades, great for day trading. So right now, I'm still considering that $200-day moving average as being support. I expect it to hold. Now we have a double bottom, higher low. And yes, I'm expecting us to try and move up to that 100-day moving average. Now, the one thing that we do have pending is an FOMC statement in March. So we've got about another 5 weeks before that happens. Everybody is expecting a rate hike. We can expect lots of choppy movement between these two moving averages, the 100-day and the 200-day, while we wait. Up one day, down the next. Up one day, down the next. So choppy trading for swing trading, good for day trading. So let's see if we can find a stock that would set up well for day trading. In the back of your mind, you've got to be thinking, okay, we've got this retest of the 200-day moving average. We should be able to float higher, test the 100-day moving average. So for the next few days, we could have a little bit of a bullish bias. Maybe the market opens lower. Today, I think the S&P is down about 5 points right now. Okay, so we're going to get a soft open. That means I'll have an opportunity to sit back and evaluate stocks, try and find stocks that have that relative strength. Hopefully those stocks will give me a little dip. I'll have a little better entry point. Wait for the market to stabilize. Wait for the market to find support. Market finds support. Stock showing relative strength. Okay, let's buy it on the notion that the market is going to try and edge its way higher. That's how you would approach the market today. So I'm going to go in, we'll take a look at a couple of lists, see what we find. I'm going to go right into Pop Bull. I really want to make this video short. TSN is at the top of the list. Let's take off all this mumbo jumbo so that we don't obscure the chart. We can focus on the price action then. And we're going to remove those major moving averages. You can see TSN, very nice, big gap open. Pete told me about Amazon and stocks that tend to hold their gap. Yes, well, this one held the gap very, very well, and you can see how it started to move higher and it continued to move higher through the course of the day. Beautiful downward sloping trend line here. Breach to the upside, bullish flag formation. Very nice. Horizontal support right there. That comes into play around the $94 level. Stock broke out above it. Yeah, I like TSN. That's going to be your stock pick of the day. I don't know if I'll do a video tomorrow. Maybe I'll do one on Thursday. TSN, I'll review it right away. I think this is going to be a stock that continues to grind higher. Let's go through and see what else we got. SAVE, merger news there. Choppy, no thanks. This is a hot stock, meaning big volume. You can see how much volatility it has in it. So it was hot yesterday, probably set up well for day trading. And we have BMY earnings before the open. Excellent reaction. Breakout to a new relative high. Zoom out. Take a look at the longer term perspective. Still has some upside to go to that $69 level. Yeah, BMY looks good. Let's go into Pop plus Bull. What is that? That simply means that these stocks were on Pop Bull yesterday. This is my favorite swing trading search. This gives me a second bite from the apple. Hey, you didn't trade me yesterday. I'm still here. I'm still worth a look. Okay, let's see what we've got cooking here. I'm going to go back to the normal view, take a look at AA. That's a nice little breakout here. Very choppy stock though, so it would not be my favorite. I want to see nice, consistent price action. Coca-Cola moving higher, mixed candles, not a big mover, so I would prefer to see stacked candles. CVS has been on my list for a while. BROS, trying to get through this horizontal resistance level right in here. I'm just going to go down through the list, see what I can find. RIG, through that horizontal resistance, not bad. Still looking for something else. SENS, that is nice. Those are some stacked green candles. This stock wants to go higher. Look below and you'll see the volume on it. It's cleared all the major moving averages, 100-day, 200-day. That was beautiful. Missed that one on Friday. You had a chance yesterday. It's a nice stock. Downward sloping trend line, breach to the upside, big volume. SENS. Keep an eye on this one. It's only a $3.70 stock, but it looks really good technically. UPS, post earnings, coming back, checking this breakout right in here. Stock continues to find support in here. I'd like to make sure that it maintains that gap. If it does, this will probably be a good bullish put spread keying off of that 215 level. I would keep it inside of that prior high. That gives you a little added cushion. Yeah, I like UPS. MRO, beautiful. Look at that baby grind. Yeah, that's a really nice stock. CVX, all the energy stocks, beautiful. XOM, beautiful. ABBV, beautiful. That's what I'm talking about. That's why Pop Bull and Pop Plus Bull are my two favorite swing trading searches. That's what I've got for you today. Look for the market to try to establish support early, try to move higher. Know that we are going to have a flat open and a lot of this. So choppy back and forth, mixed, overlapping candles, no momentum. That means keep your trading light, wait for direction, be patient, favor the long side, wait for that support to be established. Then you'll have an opportunity to get long. Good luck with your trading. We'll see you maybe Wednesday, maybe Thursday. Thank you. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.